Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio. "26 years of CNBC TV18.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Friday morning. There is a bit more optimism on the screen, at least in terms of news flow with regards to that phone call between President Trump and Prime Minister Modi. And I think markets will take note once again. It's been kind of disappointing over the last many phone calls after, the phone call, nothing has moved forward. Let's see if this time it's different. I'm Prashant. With me, my colleague Surabhi and Reba. Guys, morning.
Hi. You think markets will feel Friday? Like on Thursday, we had a 140-point up move on the Nifty by close. And today, GIFT Nifty is again suggesting a 100-point bump up.
I think the phone calls help. Now, how
no?
much we don't know. Diwali phone call, birthday phone call.
Christmas can also come.
Yeah, so
New Year.
we don't know. But for what it's worth, I think it'll keep the bears in check. You know, the rupee bears and the equity bears in check. But on the rupee, we have to watch because, this whole fall that has been happening while the dollar itself has been declining internationally, that's another worry point.
Absolutely. By the way, Rima said, what is it? Fry?
Fry-ye.
Fry-ye. How do you spell it? F-R-I?
F-R-I-Y-A.
You know this, Prashant. This you know.
Come
This
on.
you don't pretend
How do
you
I
don't
know
know this. Of course you know this. You're a Fry-ye person yourself.
All right, well, let's hope it's Friday. Let's take a quick look at what you need to know as we begin this new session. So Trump and Modi, of course, spoke. And we know this because Prime Minister Modi tweeted. The conversation sort of reviewed progress in the India-US strategic partnership. I'm just essentially listing out what the tweet says and what we've been told. They also agreed to accelerate cooperation in trade, critical tech, energy, defense, security. So these are some of the other things which are mentioned as part of Prime Minister Modi's communication. Both leaders agreed to stay in regular touch as well. Not very much with regards to specifically working out a trade agreement or, whether things are progressing, where they are at, etc., etc. But it's good news. Both leaders have spoken. There's been, of course, widespread, belief on both sides, and of course, trade experts who watch this sort of thing, that basically, it's close. It's very, very close. The bulk of the thing is done, and it's about sort of, crossing the finishing line. What that finishing line depends on, of course, people disagree on, and some say this, some say that. Who knows? Now, our chief economic advisor also said, basically echoing the same thing, most India-US trade issues have been sorted out. It's not something new, but I think it kind of adds and bolsters to the comments which we heard from Prime Minister Modi as well. So this is certainly good news. Surabhi was talking about the rupee and the decline in the rupee. Yesterday, we, for example, had a senior person from Bank of America talking about why stocks have been bad performers here in India this year, why the rupee has, of course, been the weakest amongst emerging markets. There's all kinds of reasons, basically listed 3, rate differentials. But, the India-US thing also is a big sentiment dampener. So you got to get that fixed as well. So let's hope. Now, US equity spared losses as technology stocks recovered. The S&P with just 0.2% is back at a record high. Think about it. 4 weeks back, there was fear and chaos, right, with regards to what's happening with AI, etc. I don't remember, markets, at least in the last 20, 25 years, markets pricing in fear so much, so quickly. That is, the weeks goes to 40%. And then coming down, and dropping as sharply. So pricing fear in and pricing fear out so sharply in a matter of, 4 weeks? Not even 4 weeks, actually. The S&P back at a record high. NASDAQ was down 0.26%. Oracle was down 10% last night. And there are concerns, of course, about what Oracle is committed, which perhaps looks a little excessive in terms of capex, etc. But Nasdaq, by the way, was down 1.6% on an intraday basis. It recovered. That's a story, not the fact that it was down just about 0.26. Walt Disney has agreed to, in AI-related news flow, agreed to invest $1 billion in OpenAI. The stock was up about 2%, and they're saying, well, all the beloved characters of Disney are going to be AI'd in that sense, and they'll license this to OpenAI for them to be able to do this. Dollar index down about 0.4%. By the way, the dollar index last 2 days is down almost 1%. So it's not a stronger dollar, it's a weaker dollar, which is coming into view. Oil prices down 1%, so we are back at about 61.5. Ukrainian President Zelensky floating a referendum, over territory, as the US, of course, is seeking to broker that deal, putting pressure on Zelensky with all kinds of deadlines and saying that they got to do this. And just to come to India, there's the insurance amendment bill, which we've reported on extensively. Yashas, of course, our colleague, has put out what it contains and in what form it will reach the cabinet. The cabinet is going to take it up today. And then, of course, it heads to the parliament since it requires parliamentary approval. I'll just leave you with levels. Yesterday, of course, was a better day. The Nifty ended higher after 3 days of being in the red. The 20-day for the Nifty is at 26,021. And we are, of course, under it as of yesterday. But that's the level on the upside. Nifty Bank is slightly under the 20 days. It basically closed almost at the 20-day, which is 59,224. So, the 20 days remain pivotal. On the downside level for the Nifty, as I mentioned, is the November low. There are minor lows before that, but 25,320 is the big one for the Nifty Bank. It's 58,600. Gift Nifty will give you a quick sense of how we're likely to pick up, and then we will take it from there. 120 odd points. Some of this 120 perhaps on this India-US, the President, Prime Minister is getting on a phone call, most certainly. Let's hope. The gains stick by the time we wrap up this Friday.
Absolutely. It's 121. And it's hard to say how much of it is the global excitement, because Asian screens are also, very, very buoyant this morning. And the fact that US markets are continuing to chug along. So even if there is some rotation out of tech, it's going into other parts of the US market. So there's no real panic, so to speak. And that's working very well for Asian screens this morning. Check up Asia. Most of those markets are up and about. The Kospi is surging about 1.5%. The Japanese market is up, Hang Seng, Taiwan. Everything's up. Therefore, we are in step with what's happening in the rest of the world. But also there is the added excitement of that phone call. And can that put the bulls in leadership position, and more convincingly so? We'll find out, but that looks like a solid start. So actually on that phone call, let's tell you exactly what transpired overnight. Prime Minister Narendra Modi held a telephonic conversation with US President Donald Trump. The leaders exchanged views on expanding cooperation in trade, critical technology, energy, defense, and security, and also agreed to work closely to address shared challenges and advance common interests. The leaders also expressed satisfaction at the strengthening of bilateral cooperation across domains. Now, the importance of sustaining momentum to enhance bilateral trade was also discussed. Following this phone call, the Prime Minister took to the social media platform X to write that the progress in bilateral relations were discussed, and that India and US would continue to work together to achieve global peace, stability, and prosperity. So no clear specifics on the trade negotiations, but a brief mention of overall cooperation, which includes trade as well. We, in fact, caught up with a panel of experts to interpret this phone call and what, how markets should read it. Here's Atul Keshup, president of USIBC, and Mohan Kumar, former ambassador to France, who shared their views on the latest development.
This is all positive momentum. I noticed that there was a quad counterterrorism engagement earlier last week. And Ambassador Quatra is making the rounds in Washington, talking to various stakeholders, including on Capitol Hill. The two leaders are now realizing that something very positive is in their grasp, that the two greatest democracies on earth, which rely on each other so much for technology and talent, actually could make a landmark and historic trade deal that would be to the benefit of both peoples. And I think it is in that spirit that this phone call took place.
I see actually the trade agreement is more or less complete. It's really a presidential call that President Trump has to make. And I think I find it extremely comforting that Jamieson Greer is bold enough to say that this is the best offer Delhi has put on the table. This has been my sense for a while, So I don't really think the trade agreement will be a serious obstacle. I think when the two leaders talk of sustaining momentum in trade, they are talking about the Compact Initiative, which talks of reaching $500 million trade by 2030.
Okay, so some of those experts feel that the trade agreement is just around the corner. Let's take this conversation forward. We have international trade expert Abhijit Das joining us for a quick chat on the phone line this morning. Thank you, Mr. Das, for being with us. Now, how would you interpret it? Should we start getting a little more optimistic that the call is maybe a precursor to something more definitive?
Yes, absolutely. The call certainly indicates that the prospects for the trade deal, or at least the first phase, which was to have been concluded by fall this year, those prospects have definitely brightened, coupled with Jamieson Greer's statement that this is the best offer received from India, lends further strength to the possibility of the trade deal being round the corner. But having said that, we also need to recognize 2 points. One is that the phone call between Prime Minister Modi and President Trump did not include any reference to the Russian oil penalty on India. I'd have loved to see that, having been part of the conversation. And the second very important point is that it's been an excellent move on part of the government to put the readout of this conversation on the social media. We all know how President Trump is prone to what can generously be called exaggerating claims in his telephonic conversations. So it's great that we have the Indian perspective on what actually transpired. So in a nutshell, we are very close to the trade deal, but we will have to see whether the eventual outcome is fair, equitable, and balanced, as had been mentioned by Mr. Piyush Goyal, our Commerce Minister.
Abhijit, morning. Prashant here.
Morning,
when we
Prashant.
say trade deal, Abhijit, you mean the 25% penal going away, and then so you expect what? I mean, when we hear, we wake up to what, like a effective tariff rate of 16-17%. Forget the rate. My question is not so much about the rate, but will it be, do you expect that the penal 25% to go away and then to work to start on the other reciprocal 25, or?
What I expect is that the penal 25% on account of the Russian oil tariff will certainly go away. Not only that, the reciprocal 25% reciprocal tariff, that should also come down, I guess, to about 15 to 16%. So this is the least that we must expect from the first phase of the trade deal.
But, Mr. Das, so what will be the bargaining chip? What you're describing is an absolutely wonderful, ideal situation, but something's got to give, right? And we know the sticky points. We've been discussing them for the better part of this year. So what will it be? What will it take to get there?
Sticking points, I guess, will continue to be, number one, some items in agriculture. In particular, issues around India accepting health certification of, let's say, dairy, meat and poultry products into India. That has been part of the US deal with, let's say, Malaysia, whereby Malaysia had to give up its own health requirements and mandatorily accept the US certification. That could be a sticking point for India, particularly in respect of dairy sector, where there are concerns on religious grounds about the feed which goes into the cows. So that could be one sticking point. Another sticking point could be digital trade. And there, one important issue could be on the e-retail platforms, where I speculate, and there may be some basis for the speculation, that there could be some pressure on India to move away from the marketplace model into an inventory model.
Abhijit, we'll continue to track this with you. Thank you very much for joining us bright and early. Appreciate you coming on here on CNBC-TV18. Well, Rima, let's get to the markets. I think we've got some views coming in.
Indeed. Let's get to the equity calls then. It's Mahesh Nandarkar of Jefferies who says that they expect India's relative performance versus emerging markets to improve in calendar year 2026, driven by improving corporate EPS growth. They also believe the worst for the rupee is behind. He says housing trends have taken a breather, but they expect the upcycle to resume soon. He adds, while equity supply overhang remains, value versus growth equation has started looking attractive for several bottom-up ideas. 30% of the coverage stocks are trading below their 10-year average. He says their nifty target of 28,300 for December 2026 implies a 10% upside. All right, let's also tell you what we've lined up for you on our show today. So first up, coming up at 8:30, we'll connect with Siddharth Khemka of Motilal Oswal Financial Services for some fundamental stock talk. At 9 o'clock, we'll have Parthiv Jhonsa of Anand Rathi Institutional Equities to focus on the metal sector and Tata Steel's Capex program. 9:20, Manishi Ray Chaudhary of Emma Capital Partners will be our market master for the day. 9:35, we speak with the management of NLC India as the company declares commercial operation of 660 megawatt power plant at Ghatampur. And following that, Nimesh Shah of ICICI Pro AMC will be joining us in our studio at 9:45 a.m. as their IPO, the mega IPO, opens today. And towards the end of the show, in our special segment, Indianomics, Lata speaks to former SEBI whole-time member Anand Narayan on the cap on mutual funds investing overseas and other issues.
Okay, it's time for a quick break, but we have a lot of stock-specific action that we'll be covering today. In our top 10 segment, we're looking at Tata Steel, Honasa Consumer, Piramal Pharma, Sonoris Pharma, Vedanta, NBCC, and Astra Microwave. These are all on the back of positive news flow. Yes Bank, Dr. Reddy's Laboratories, and Indigo are stocks that may open out in the red, and we'll tell you why in just a bit.
"26 years of 26 years of CNBC TV18.
Welcome back. Well, let's talk about a lot of the stocks that are going to be in focus, because overall the GIFT Nifty has been telling us that we'll have a positive start. The implied open is up more than 100 points. Now, what about individual stocks? That's the picture on the overall mood and the setup this morning. Our team, as always, is standing by with a CNBC TV18 list of top stocks to watch. Guys, good morning and happy Friday to all of you. So, Darshan, let's start with Tata Steel. What are you watching out for today?
Good morning, Surabhi. So I'm going with green for Tata Steel. Company had held analyst call yesterday and talked about, or basically has given details about Capex and the expansion plan. So company is saying that detailed Capex plan will be finalized by March of 2026. Regarding the expansion of Neelachal capacity, it's saying that they are looking to expand the capacity by 4.80 million tons per annum, and commissioning is expected by FY30. Regarding the MOU with Lloyd Metals, company is saying that it has marked its Maharashtra entry to produce crude steel, and at all the operating iron ore mines except Neelachal Ispat shall be completed by FY30. Nuvama has come out with a note. It has retained hold call. Target is cut to 175 from the earlier target of 183. It has also cut FY26-27 EBITDA estimates by 5% and 3% respectively amid lower steel prices. So, but on the stock front, I'm going with gain mainly because of the expansion plan.
Okay, all right. So thank you very much for that. So that's Tata Steel in focus. Honasa Consumer is the next one we want to focus on. Mangalam is here with details. Mangalam, morning.
Good morning. So they've gone ahead and made an acquisition. They've acquired the BTM Ventures. This is the company that owns the men's brand Reginald Men, and they've bought it for an enterprise value of close to 195 crore rupees. They will first buy 95% and thereafter 5% over the next 12 months. Now, here's what is interesting. This is a business which makes products for men's grooming and started just a few years ago. In FY24, their revenue was 40,000 rupees. Mere 40,000 rupees, which scaled all the way up to 20 crore in FY25. And the trailing 12 months, they've done revenues of 74 crore. One would imagine they would be loss-making with the kind of growth that they've seen. Turns out not. Their gross margins are 72%, EBITDA margins at 24%, and 80% of their sales coming from South India. So the implied EV to revenue is 2.5 times, EV to EBITDA is close to around 11 times. So they've acquired a fast-growing, profitable company in a market which is growing extremely fast at decent valuations as well. Men's grooming, currently a 20,000 crore market, which could double by 2032. and they have the opportunity to grow via category expansion, geography, and channel scale. All these factors should work for Honasa. See some green out here. Saw the product, looks interesting.
Thank you very much for that. And you know, the founder of the company, Reginald, she's just 24, 25 years of age. She started it 3 years back. She's not raised any external funding, no debt on the books. It's incredible. You know, as he said, 75 crore approximately in terms of trailing 12-month revenue and profitable. Thank you, Mangalam, for that. Ritu now joins in for the latest on Yes Bank.
Well, good morning, Reema. You know, the retail banking business has been in the red for Yes Bank for the better part of 2.5 years, and now we're seeing the board take some action. The Nomination and Remuneration Committee, we understand, in its recent meeting has decided to not extend the tenure of their executive director in charge of the retail banking business, that is Rajan Pental. And therefore, when his current term ends, he was appointed for a 3-year term as the ED. So his current term will end in February next year, and that's when he is expected to exit Yes Bank. Now, this is significant because, you know, he's been heading the retail banking business for Yes Bank for the better part of the last decade. And in fact, there's been serious attempts made at somewhat, some sort of a turnaround, but the bank continues to report losses as far as the retail banking business is concerned, which is now the board has decided to take this step. It's unclear yet who his successor is going to be. But even as far as the CEO position of Yes Bank is concerned, the board has not yet sent any names or shortlisted any names to be sent to RBI with just 4 months to go for the current CEO, Prashant Kumar's tenure to end in April next year. So that is another space to watch out for. So uncertainty, at the leadership level, there's been some exits on the retail front in the last year as well. We'll have to see how this pans out from here on.
Okay, all right. Ritu, thank you for that. So we'll keep Yes Bank on the radar. Let's go across to Ekta. She's watching out for a bunch of pharma stocks. Ekta, morning. Which ones are they?
Morning. I'll start with Dr. Reddy's, or rather Seneris, which is in focus because they've announced the launch of Deferiprone tablets in the US, which will be marketed by Dr. Reddy's. And it is basically used to treat iron overload that people have. Separately, we have Piramal Pharma, where the US FDA inspected their Kentucky facility, issued 4 observations, and they're related to enhancement of procedures and will be classified as voluntary action indicated by the company. So that should be a green as well. And lastly, Dr. Reddy's is in focus because Novo Nordisk has moved the Delhi High Court against export of semaglutide by Dr. Reddy's, and the court has allowed Dr. Reddy's to manufacture and export semaglutide to where Novo Nordisk does not hold a patent. But they've appealed against that particular order, and hence the court case continues. But that should be a marginal sort of move for Dr. Reddy's, considering that the court case is limited to the Indian shores.
Thank you very much for that. Iron overload. You know, I always thought we consume iron tablets, supplements for less iron. And now, clearly the reverse is also a condition, a medical condition. But Sudarshan now joins in for more stocks which are in the news now.
So another day, another update related to Indigo. Writ petition is filed before Delhi High Court, and that petition has mentioned Aviation Ministry, DGCA and Indigo as respondents. And company has replied to High Court, and it's saying that it's undertaking appropriate measures to respond to the petition. And also remember that DGCA's 4-member committee is going to meet Indigo's CEO today. Now, next one is Vedanta. It has emerged successful bidder for Ganjana Nickel Chromium and PG block. For NBCC, it has bagged order of almost 289 crore, of which 255 crore order is from Nalco, and remaining 33 crore order is from SAIL Bokaro. Last one is Astra Microwave. It has bagged an order of 171 crore. It's for procurement of Klystron-based S-band Doppler weather radar. So all the stocks, I'm going with green except Indigo, for which I'm going with minor red.
Thank you very much for that. And I will also watch for stocks which are sensitive to developments on the India-US trade deal, the Gokuldas, KPR Mills, etc. If the conversation between Trump and Modi has a positive sentiment rub-off on these stocks about a potential way forward. Here's a quick recap then of the top stocks. Stocks with positive news flow are Tata Steel, Honasa Consumer, Piramal Pharma, Seneris Pharma, Vedanta, NBCC, Astra Microwave. While stocks with negative news flow are Tata Steel, Yes Bank, Dr. Reddy's and Indigo. All right, moving on. Let's get a handle on what's happening in the world of commodities. Manisha joins in as always. Manisha, what are you looking at?
Well, I'm looking at metals because they have continued to surge even as 2025 nears an end. So you have gold prices, which gained up by 1.5% yesterday and just about $100 away from its all-time highs that it saw in the month of October. But it is silver, which continues to outperform, and with a big margin here, silver has yet again hit an all-time highs in the overnight market, 4% of gains coming in. And we are now trading above $64 an ounce, more than double from where we started this year. And it's not just about precious metals, because take a look at copper, and we've seen a new all-time high come in for this one as well in the overnight markets. Copper is now up 36%. Platinum, palladium gained up anywhere between 1 to 2.5% overnight. You have seen gains come in for base metal prices also. So aluminum, zinc also trading at around 1.5 month highs right now. So the decline in dollar index at around 8-week lows clearly has been supportive for many of these metal prices in Asia.
Okay, all right, Manisha, thank you very much for that. Appreciate it. That's commodities, more coming up a little later. We'll take a quick commercial break here. Up next, Siddharth Khemka of Motilal Oswal Financial Services for some fundamental stock conversation. Stay tuned.
"26 years of CNBC TV18.
Welcome back. We've got about 30 minutes to go for pre-opening rates. So let's get you up to speed with all the stocks which should be on your radar. And these are some from the brokerages, the ones which brokerages have highlighted. Sudarshan joins in with that.
So I have two upgrades today. First one is L&T and second is Thermax. Goldman Sachs has upgraded L&T to buy from neutral, and target has been increased to rupees 5,000 from the earlier target of rupees 3,730. It says companies poised for growth in defense, green hydrogen and nuclear power. FY26 combined total addressable market is rupees 1.40 lakh crore, and which is expected to increase to rupees 3.40 lakh crore by FY35. It also sees healthy order backlog and increased confidence in domestic capex recovery, and it believes that compounding revenue might see at low double digit and profit in mid-teens over next 5 years. Kotak Institutional Equities has upgraded Thermax to buy from AD, but kept the target unchanged at rupees 3,575 per share. It says companies poised to grow fast and margin too can improve from current levels, and believes the recent correction provides an attractive entry point, and company's portfolio is benefiting from scale-up in existing businesses, expansion, and the entry that company has made into new businesses. Margin improvement looks imminent due to reduction in share of troubled orders and rebound in underutilized chemical businesses, and positive mix in product segment will also aid growth for the company.
Okay, all right, got it. We'll keep these stocks on the radar, L&T and Thermax. Sudarshan, thank you very much for that. Let's welcome in Siddharth Khemka, Head of Research and Wealth Management at Motilal Oswal Financial Services. Sid, good morning. Good to have you in. So where do we start? Let's start with Thermax, actually. I wonder what you think of this call that's coming through, because Thermax and some of these industrial stocks have completely fallen out of favor. Is there any merit in looking at Thermax now?
Good morning. First of all, I would like to wish CNBC-TV18, the entire team, congratulations on completing 26 years of outstanding service.
Thank you.
And the business, news and financial education, and wishing the entire team continued success.
Thank you.
And more milestones ahead. So coming back to Thermax, yes, I think if you look at the entire capital goods space, the steam has definitely come down, but there is a big divergence in some of the companies. While the L&Ts and Cummins continue to deliver, Thermax has seen a weak Q3, revenue declining 5%, EBITDA margins contracting to 7% due to cost overruns. Order inflows were weak, growth of the 6%, and while the company and the management is highlighting that there will be a gradual recovery, we believe that there is some cost challenges and the weak infra profitability going ahead. So hence we have a sell rating on Thermax with a target price of about 3,000. I think that is something that has come down after the Q3 numbers. What we like in this space, I think Larsen is something that we prefer in this space. Outlook remains pretty strong, supported by mid-teens order inflows, strong visibility, especially in the Middle East, where the management expects about 10 to 15% annual growth over the next 5 years. We also expect good, strong order inflows in the thermal BTG projects. Some of the order wins from NTPC, Adani Powers, that is raising the future growth opportunities. So overall, we believe that the risk mitigation framework that L&T has for the mega projects, plus the growing international diversification, adds to the overall positive view on L&T. So there we recommend a buy with a target price of 4,500.
Siddharth, hi, morning. So at Motilal, how have you all assessed Interglobe Aviation, where the stock is right now and the news flow? And what are you all advising shareholders?
Yeah, Rima, hi, good morning. I think a lot of news flows, there is definitely a guidance cut for Q3 by the management. So what we see is that definitely in the near term, because of the uncertainty and the disruptions, there could be a pressure, some of which is already in the price. So we are expecting the stock to consolidate for the near term. The long-term growth triggers definitely are there with the large fleet size additions over the next few years, the expansion in the global markets, and the market leadership that they have. So I think bearing the near-term uncertainty where the stock could consolidate or remain under pressure, I think long-term investors could continue to hold the stock, while short-term investors could look to diversify into some other avenues.
Okay, so if you are a shareholder, continue to hold, but would you recommend buying at 4,800 or not yet?
Yeah, Rima. So I think for buying or adding new to the overall Interglobe, we would wait for Q3 numbers where the bulk of the pressure is taken off. You have heard about the government asking the company to give additional, some remuneration to these people who have got suffered. So those additional cost pressures could be borne in the Q3 numbers. So I think once that is clear, there will be more clarity on the growth ahead.
Siddharth, big IPO opening out today. ICICI Pru AMC will be speaking with the management as well shortly. They are huge, right? They're, right now, in terms of average quarterly assets, they are the largest. And they have a large equity share, and having more of equity assets under management usually is, very profitable as well. What do you think? Subscribe, avoid, and what about the pricing at which they're coming?
So, unfortunately, we are one of the lead bankers, so I would avoid giving any.
Okay. So you won't take this one. Let me ask you. Okay.
Rima, should we revise just the basic offering? I mean, I
Okay,
think
we'll
do
just
it a little.
We'll get the graphics up in just a bit.
But, all these companies have been humongous wealth creators, right?
Yeah.
I just was noticing HDFC AMC has a market cap of 1 lakh.
13,000.
14,000 crores, right? SBI Mutual Fund is the leader, of course. I mean, I think about 11 lakh crores in assets under management. ICICI is about 10 lakh odd crores. Yeah. But as you said, Surabhi, what matters is equity AUM, because on debt assets, you make very little money.
So SBI is larger in terms of AUM compared to HDFC, but in terms of actively managed, ICICI Pru is larger than SBI, and plus
because
in terms
SBI
of
has, I think, all the NPS, etc. as well, and they have.
And some accounts are dormant where you haven't seen action for the last 12 months, but because they have a large equity exposure compared to the rest, the largest, their profitability is also higher. But we'll discuss that.
Large equity exposure and the fact that active assets, like you're saying, versus passive. Passives, you don't make money as a money manager. But there's a few basis points here and there, but active fund management is where the money is.
Well, I think it's one of the best businesses, right? It's like you can have 10 people to start. What are the costs, right? Costs are people and distribution, mainly, right? And you can have 10 people managing 100 crores, 10 people managing 1 lakh crores, 10 lakh crores, whatever. I mean, obviously, the size increases, but it's so non-linear, the cost that you got to put in, and of course, I mean, the profits that you can make. That's why it makes it so attractive. We'll take a break here. We'll come back with some technical trading ideas. Sudeep Shah and Mitesh Thakkar on the other side. Stay tuned. Coming up.
$26 years of CNBC-TV18.
Okay, welcome back. There's 15 minutes to go for the pre-open session. Hormuz is here with the big movers from yesterday, and what lay behind the price action. Hormuz, over to you.
Good morning, Prashant. And we spoke about a lot of these names yesterday throughout the course of the day in the broader markets. The rebound that we saw, Shakti Pumps was one such name. All the pump names were in focus yesterday, considering the order wins that they won from the MSEDCL. Now, the Shakti Pump stock snapped an 8-day losing streak yesterday. It was the biggest single-day gain since January of last year. Volumes were the highest since October of 23, and over 2.5 crore shares were traded yesterday on Shakti Pumps. The 20-day average of just around 5.5 lakh shares, and out of those 2.5 crore shares, only 19 lakh shares were marked for delivery compared to a 20-day average of 2.5 lakh shares. So the stock is down 40% this year, but bear in mind that in 2024, the stock was up 6x. Now, Neogen Chemicals was the other one among the top Nifty 500 gainers yesterday. The second straight day of gains that came in after 6 days of losses for the stock. The volumes have been on the rise for 5 straight sessions now, and Thursday's volumes were the sum total of the last 173 sessions put together. The kind of volumes that which the stock moved yesterday. 86 lakh shares were traded. The 20-day average is only a lakh, and out of those 86 lakh shares, only 4 lakh shares were marked for delivery. The 20-day average here is less than 60,000 shares in terms of the delivery volumes, and the stock has halved so far this year in 2025, and in 2024 the stock was up 50%, so it effectively cancels itself out. And lastly, Premier Energy is one of the biggest, most successful listings of last year. Only the second day of gains that the stock saw in the last 10 sessions yesterday. The stock made a 52-week low intraday and then staged a rebound, ended around 4.5-5% higher. 39 lakh shares traded, the 20-day average of 9.5 lakh, and 8.5 lakh shares marked for delivery, 20-day average of around 4.5 lakh shares. The stock made a post-listing high of close to 1400, down around 35% from those levels, and is now trading around about its listing price, which is close to 900 rupees.
Thank you very much for that. Siddharth, any of these stocks in your coverage? Shakti Pumps, Premier Energies and Neogen Chemicals?
So I think only Premier Energy is something that we cover. So if you look at the overall renewable energy space, the capacity expansion that they have been doing, that is something that has been a good growth story. But in terms of sentiments, I think there has been a lot of flip-flop, especially from the US, and that is leading to some sentiment change. Otherwise, what we believe is that some of these companies, both Premier, Vari Energy, we believe these are good companies from the long-term perspective, especially given that there is a lot of focus on renewable energy, and these companies have been adding capacities, which is leading to the growth.
What about Honasa Consumer? They've marked their entry into the growing men's personal care and grooming market. They've acquired Reginald Men's for 195 crore rupees, but Mangalam was telling us that the TAM of men's grooming is 20,000 crore rupees. This is a fast-growing acquisition. I mean, your reading?
Unfortunately, we don't cover Honasa, so I would not have any specific views on that space right now.
Okay. That's Honasa, but related space, Swiggy. Siddharth, there's been so much of debate. By the way, I read something which said that this 10,000 crores they are raising, one criticism, it was one of the brokers, I don't remember who, one criticism was that a lot of this is probably going to go in customer discounting. All the cashbacks and the offers will come back, not necessarily fresh customer acquisition or, going into the expansion of the business. Your thoughts on Swiggy right now?
Yeah, I think some of those expectations is unwarranted. We have seen the worst phase of discounting over. I think the entire sector, especially if you look at even Zepto, which was leading to some of these discounting, is now looking for an IPO. So they are focused on profitability. So I think the competition is definitely there, but it is much more matured in the sense that bulk of these funds that has been raised will go towards a calibrated capex expansion. Among the two listed players, I think there is much more room for upside in Swiggy, given that this company is now transitioning towards profitability, supported by an operating leverage, efficiency in the food delivery business, and Instamart, the GOV is improving on a sequential basis. So even we expect that the Instamart to achieve break-even by the first quarter of FY27, which should lead to much more re-rating going forward. And yes, there is some competition which is intensifying. Swiggy's execution, strong capital base with the fundraise, that keeps him much more stronger in that sense. So we like Swiggy. We have a buy rating and a target price of 550.
Okay, the war chest with these quick commerce companies. For Swiggy, it stands at 17,000 crore rupees. For Eternal, at 18,300 crore rupees. And for Zepto, according to reports, at 8,500 crore rupees. But just back to ICICI Pru AMC, the IPO opens today. So some quick numbers. One, the issue size is 10,600 crore rupees. This is a pure offer for sale. Now, it was incorporated about 30 years back as a joint venture between ICICI Bank and ICICI Prudential. ICICI Bank has a 51% holding, Pru has a 49%. But in this offer for sale, only Prudential will be selling 10% holding. ICICI Bank is not participating and they're not looking to raise any fresh equity. Now, some stats about the size of this company. It is India's second largest AMC in terms of an overall AUM, but the largest in terms of the active management. So their active management, the actively managed AUM market share stands at 13.3%. And in that, their equity mix is also loaded more than the others, and equity mix is about 55-56%. On account of the fact that it has more equity, more actively managed, it's also the most profitable amongst the AMCs. So the operating profit market share for ICICI Pru stands at 20%, higher than SBI, higher than HDFC AMC, and higher than Nippon India. The revenue, EBITDA and profits have grown at a CAGR of 32% over FY23 to FY25. So they've enjoyed the tailwinds of the, rising, the strength seen in the AMC business with financialization of saving, rising retail demat accounts, etc. Now, in terms of pricing, and analysts say it's fairly competitively priced. ICICI Pru AMC implied market cap will be 1.07 lakh crore, which is similar, slightly lower than HDFC AMC market cap, which is 1.13, 1.14 lakh crore. So all that is good. What are the risks? The risk is regulatory because of the SEBI proposal that came out in October about capping TER. Will that compress margins, increase operating ratios, increase the operating costs, pardon me. Secondly, competition. Jio BlackRock has lost. Many discount brokers are also planning to launch their AMC business. And third, generally the equity business is cyclical. So when there is a downturn, you do see the AUM or the financials getting compressed. But that is the mega one, and I think it's the fourth one from the ICICI group, which will come out.
Yeah, absolutely. And, definitely like Prashant mentioned, because most of these AMCs, HDFC, of course, is the one that's been the maximum, the biggest wealth creator in the pack. But most of the AMCs have done well and they have created wealth for investors. So let's see if ICICI will do the same.
One of the ways to look at how attractive the business is, just look at the line of companies lined up to launch.
Everyone wants to set up an AMC. And Prashant, I asked this question to a lot of the mutual fund CEOs, saying every day there's a new AMC launch. Is it really that great a business? Isn't it going to become too hyper competitive? But most of them have responded saying that there's a huge opportunity. Considering that we've barely scratched the surface.
Yeah, so you report on the 20,000 crores of SIP money. What was the number? 20?
It's touching 30,000 crores, 29,500.
SIP.
Just SIP flows, gross SIP flows of 30,000 crores coming in every month.
There you have it. I mean, that's the raw material, and the raw material is in abundance, right, at this point in time.
And the anchor book also is very well subscribed. If we have those numbers, they raised about 3,021 crore, Temasek, GIC, LIC, JP Morgan, Aberdeen.
And a lot of the local AMCs.
A lot of the local AMCs also want a pie.
Want a pie. The local mutual funds want a pie of ICICI Pru AMC. All right, we'll take a break on that note. To come back on the other side, we'll have the pre-opening rates with us. Also, Parthav Jhonsa of Anand Rathi Institutional Equities will join. We'll talk about metals, specific spotlight on Tata Steel, and then, of course, our technical experts with today's trading calls.
"26 years. 26 years of CNBC-TV18.
Welcome back. So we'll start getting our pre-open rates in just a bit. And the implied open has been telling us it's going to be a good start. 100 plus up. The question is, can the bulls build on that? Let's bring in our technical experts. Good time to discuss the trades of the day. We have Sudeep Shah joining in, and we have Mitesh Thakkar as well. As always, gentlemen, good morning. Mitesh, so we're probably set for a gap up, but then how to trade it?
Yeah. So I think, you raised a very pertinent question when you said, let's see whether, it can be sustained. I think, if we open close to about 26,000, I think 25,950, 940 becomes your immediate pivot, which is where, the 20-day, the short-term moving averages are placed. So I think as long as we remain above that and post hitting 26,000, there is no immediate selling pressure, then I think we might head back to the earlier highs of 26,200, 50,300 zone. So I think that's the target area. Closing about 26,300, of course, will be a very different setup altogether.
Okay. Sudeep, hi, morning. What about you? Nifty or Bank Nifty trades?
Good morning. See, Nifty-wise, I feel I agree with Mitesh that 26,000, 26,050 now remains an important level. Even if we see the call writing data, 26,000 and 26,100, we've seen additions yesterday also. So there, I feel this zone of 26,050 has utmost importance, and above that, one move up to 26,200, 26,250 is likely. So 26,050 on the upside is important, and on the downside now, 25,800, 25,850 zone remains a pertinent support.
Okay. Gentlemen, let's also get down to stocks. By the way, the pre-open has just started, and I think we'll have to wait for it to settle because right now it's showing about 70 lower on the Nifty. HDFC Bank, Bharti Airtel, these rates are yet to settle. They're a little all over the place. Yeah, I think now it's beginning to stabilize a little bit. Let's do the stocks while the indices settle down. Mitesh, what are the names you're going with?
Yeah. I have 3 buys and 1 sell. On the buying side is ABB with a stop at 5214 for targets of around 5,300. Indus Tower is a buy with a stop at 404.5 for targets of 422. A buy on Policy Bazaar or PB Fintech with a stop at 1924. And look for targets of around 2,000 on the upside. And 1 sell call, which is ONGC. Keep a stop at 243. Look for targets of 228.
Okay, and Sudeep, your stock calls for the day?
The first stock that I like is Lupin. Yesterday, we have seen a decent move in most of the pharma names, and within that, Lupin remains very strong on the weekly charts. We have seen a consolidation right from May 2025 till yesterday, and we're seeing signs of a breakout there out of that consolidation band. So 2040 remains the stop loss, and 2150, 2180 is our target. The second stock that we like is Bharat Forge. Now, this stock had moved in the last month up to 1440, 1450. Post that, it retraced back, say 50% of its move, and 1350 acted as a strong support. And yesterday, we have seen one more positive candle over there. So what we feel is from here on, we may see a continuation of that previous rally, right, which has started from 1200 levels. So from here on, 1340 remains a stop loss, and 1480, 1520 remains an important level on the upside, and which are our targets for the next couple of months.
Okay. All right, gentlemen, stay on. We'll have some more questions for you in a bit. By the way, the pre-open is a little curious, you'd have to say, because our immediate sense of optimism on that phone call between the two great leaders, the Indian Prime Minister and the US President, that's not exactly being mirrored. It's very muted, 40-point sort of an up move. So maybe, a sense of hesitation in the market. Sensex up about 100 points at this juncture. So we'll see. We'll see how it builds. But as promised, let's also get to a conversation on the metal space with a specific spotlight on Tata Steel. Of course, the company and the stock is in focus after it announced a major expansion, a lot of capex programs. To talk about this, the outlook ahead for Tata Steel and for, of course, the metal space overall, Parthiv Jhonsa, Vice President at Anand Rathi Institutional Equities, is with us. Parthiv, thanks so much for joining in. So it's a large expansion that Tata Steel announced yesterday, right? They're looking at doing it organically, and then the tie-up with Lloyd, where they're looking at expansion in Maharashtra. What did you make of the announcements and the kind of capex that will be required?
Hi, good morning. Thank you for having me. So let me just start that yes, this is growth capex which basically Tata has come out, and this is not just for the Tata, even for Lloyd's equally is as important as that's for Tata. And now the entire capex or the entire growth journey, what they have laid out, day before yesterday, is basically taking care of taking NINL from so 1 to 4.5 million ton at Miramandli, and thereafter they have even tied up with Lloyd's, wherein they are so main focus of that JV is to basically take that slurry pipeline which is going through Babil, which is basically connecting their mines to the Kalinganagar kind of a facility, kind of a pipeline, and which has a further potential to take it to a port-based kind of a pipeline as well. Another aspect is basically they have developed this one low carbon technology at Netherlands, which they are trying to get it in Jamshedpur and trying to put up a 1 million ton kind of a pilot project, which is at a much lower capex than your regular greenfield project, which usually requires, just to give you a ballpark, just requires almost about 7 to 9,000 crores per million ton. This will be done at a 2.5 to 3,000 crores kind of a capex. So it's practically about one third the capex. So that's also very positive, where you can feed slag, you can feed low quality ore, which also has a lower emission compared to your blast furnaces, which also helps you to adhere to your European standard or CBAM norms to an extent, right? So all these things, all these things basically gives them a growth journey going forward. We have always been talking that, okay, Tata Steel has given out a growth journey, which will basically double down their domestic capacity, but there was a lot of unknown variables that how will they take it post 28-29. But now a lot of clarity has been given out by the management. So a big cheer for the management that they have laid out, not only taking their flagship or legacy facilities, but even taking care of the new facilities. Now the beauty is, because these facilities are new, they already have engineering in place, so the time taken to set up a blast furnace at NINL would be much shorter, would be much faster than what they have done at the other facilities, right? So you are saving on your time, you are expanding faster, you are taking that opportunity of India being being the fastest growing in ferrous space. So that's basically for Tata.
Hi, this is Rima here. Could you give some numbers? What, according to you, would be the total capex that you're factoring in, and how will it be funded?
So let me just put this across. What is the total capex? So as I told you, the Jamshedpur is expected to be close to about 2.5 to 3,000 odd crores, which the management has already given out the number. The other number, which is basically the NINL, which is the largest chunk of the entire thing, the management has already clearly stated that they will get back in the next couple of months. They also are doing some preliminary work at their end. But if you want to just put it across, usually a greenfield requires almost about, say, 8,000 odd crores. So just multiply that by 4.5. So you'll get about 35 or 1,000 crores kind of a capex. I think, but it is expected to be a bit lower than that, because you already have engineering work in place. You already have a facility. You already have a major land bank in place at NINL. You already have mines in place. So your overall capex should be much lower than that.
How much lower? So what are the numbers that you're working with? I understand the management will get back with the official figure, perhaps, by March or in the next couple of months. But how much lower than 35,000 crore?
I'll not give out a very specific number out, but let me just put it across. It will be substantially low. Let me just put it across that way.
Got that. And how will
I want to avoid giving it, because the management clearly have indicated that the numbers, even they are doing their own. They have gone to their own drawing board and they are doing their own calculation for it.
Got that. Will funding be a concern? How will it be funded, to your mind? What did the management say about that? What could be the peak debt for the company, since Europe refurbishment is also on?
See, I think your domestic is at a very good space compared to your European subsidiaries for Tata. You already doing a good, 15,000 kind of an EBITDA, and that would keep on continuing going forward till at least till 2030, till the time they have their own mines. What I believe is capex, the debt would not be a problem for Tata at the end of the day. They would be able to, furnish that debt, and they'll be keeping it below the threshold, whatever they have quoted in the past.
Okay. And the other, talking point in the markets is that what if the safeguard duty doesn't come? What will be the impact on steel prices?
Okay. So I was just on a call with a couple of my my channel checks or my vendor networks today morning itself. So some backward calculation we did, just to give you perspective, China, CFR is almost what, say, $500 odd. When you add close to your all the duties and your port handling charges, net it works out to, as on date, without the safeguard, it works out almost about 10% higher than your domestic HRC, right? If safeguard does not come, this is the gap. You are at almost about 10% discount to the global prices. Now, Bao has already taken a 14% hike yesterday. $14 hike yesterday, which is basically expected to come in India in January. What I spoke with a couple of vendors, there is some very minor price hike because of the supply-demand dynamics, almost about 500 rupees in major markets like Bombay and Central India. So there is a 500 rupees price hike, which is currently there in the market. You can expect another 1,000-1,500 hike in coming weeks by the time you reach first or second week of January. So overall, so if you consider month on month, it will almost be about 1,500 to 2,000 rupees of a hike, which is expected.
Got that. And just looking ahead to 2026, I think this year belonged to copper. But
Yes.
next year, between copper, aluminium, which base metal are you more bullish on?
Let me just give you some background across not just copper, aluminum, just across the top five. Copper, yes, I'm bullish today, and I think for the next 2 to 3 years, because of the global copper crunch, number one. And number two, no major mines are coming up. If you see, I had recently initiated on Hindustan Copper also, where I clearly mentioned this, that the global capex towards copper right now is basically going up, and it's been 4 or 5-fold over last about a decade or so. There are no new major, resource which has come up in last 2 years, right? So the global copper crunch is going to remain. I think the LME at $11,700 might remain around this level. And what we are building is around 11,000 kind of a level on a LME over next 1 to 2 years. So copper is going to be the favorite out of all the five, even for next year, followed by aluminium. Aluminium being the second, biggest commodity after steel. There's a lot of demand coming from all these sectors, whether it be legacy sectors like infra, construction, to the new age sectors of, renewables or EVs and so on and so forth, right? So copper, thereafter aluminium, thereafter you have, zinc, right? Zinc is, again, though the prices are, as I always tell, prices are globally global driven, but the demand is very Indian centric. It's because it's at the end of the day, it's related to steel cycle, right? Thereafter, you have nickel and then lead.
Okay, thank you very much. A great conversation. So many insights you've shared with us. Let's get in a few 9-10 calls. Mitesh is now back with us. Mitesh?
I'll go with a buy on ABB for targets of 5295.
ABB 5295. We'll come back to you. Let's get in let's get in Mangalam, because Honasa, at least in pre-open, is up 4-5%.
Yep, Honasa, actually as a stock, it's been quite an underperformer, barring a few episodes, post numbers, etc. When we've seen a spike, it's still below its issue price at 325 rupees. So it's understandable that the stock's seeing a bit of a spike because the news is fairly good. They've gone ahead and forayed into the men's personal care segment by acquiring Reginald Men for about 195 crores in enterprise value. They'll first purchase this, 95% and then 5% over the next 12 months. It's a very interesting business. The main product of theirs is a sunscreen, and it started about 3.5-4 years ago, where FY24 revenues were close to around 40,000 rupees. That jumped all the way up to 20 crore, and thereafter the trailing 12 months, 74 crores. They have gross margins of over 70% and EBITDA margins of 24% as well. Fairly strong in the south, 80% of their revenues coming from there. So the opportunity of scaling geographically is also extremely crucial. And the valuation for a company that has been growing so fast has been fairly, attractive as well, at 2.5 times implied EV to revenue and around 11 times the EV to EBITDA. Men's personal care market on the whole is about 20,000 crores, likely to double to 40,000 crore by 2032. So fast-growing company in a fast-growing segment with good margins. The street likes that.
Okay, all right. Mangalam got that. So Honasa definitely topping the charts this morning in terms of stock reactions are looking good, 1.5% higher. Actually, there are a lot of other stocks that were in the news as well. So let's quickly run through the list and how they are placed. Tata Steel is in focus because of the expansion. We just discussed that with the analyst as well. So minor gains coming in over there. Some of the pharma stocks, Synoris Pharma, by the way, is the one that really stands out. Gain of almost 5% on this one. Thermax is reacting quite well to that brokerage call that came through as well. And there is Astra Microwave. They've won an order. Yes Bank, where there's a lot of uncertainty about, the management change that is underway. So that's a stock that's a little flat at this juncture. We should pull up L&T, by the way. Reddy's, of course, right? Reddy's court issues with this, manufacture of semaglutide here in India and then overseas sales. Novo Nordisk is challenging even that. So Reddy's is in focus. And then there is, of course, Interglobe. The uncertainty continues around Interglobe as well. But the stock that I was referring to was L&T. It's reacting very well to the brokerage call that Sudarshan gave out earlier in the morning. It was, I think, a Goldman Sachs call where, the view is fairly optimistic. Stock's the best performer on the Nifty this morning as we are all set for the open. But 72 points higher. Guys, we'll have to say that, it could have been any other morning. That excitement around the phone call, that absolute, frenzy. That's missing, but maybe for good measure, slow and steady.
I think we should get up rupee also, because if I last checked, I think rupee also opened at a fresh record low.
90.47 on the screen.
Yeah, so...
Around where it made a new low, right? I mean, I think 48.49 was the low yesterday.
48 was a low. 52 also.
But first rates coming up. Let's just look at the Nifty first ticks. So 25,970 is where we are opening. 59,440 is where we are at in the sensex. It's about 80 and 270 respectively on those two indices. Nifty Bank is starting with about 1/3% gain. That's about 190 points. The mid-cap index is up about 1/3%. The small-cap index is, starting higher as well. So general slight lift to sentiment is what you have. So yesterday the screen looked better. Hopefully the screen stays better. At least 1/3% gain that we are opening up with the Nifty stays through the course of the day as we wrap this Friday and the week out. Let's see. Maybe it gets better. We got the Nifty heat map, which should come up on your screen, and then we will move forward from there and look at the broader market, etc. So everything, I think about 40 names are higher, and L&T is on one end. We, of course, discussed that with Sudarshan a little earlier in terms of brokerage calls. Wipro's on the other end, but more up than down, definitely. 25,980 on the Nifty. Surbhi.
I am checking the rupee, like Rima said, and indeed today morning low is 90.55. And at this at a time when the dollar index overall has been cooling off, the dollar has been cooling off. The dollar index for, just for reference, is actually just at 98.36. So overall the dollar is weak, and yet the rupee continues its slide. So we'll keep an eye out on the currency. Let's see if some stability comes in. But on the equity screen, let's see what's working. Hindalco, Tata Steel. So the metal stocks continue to do well, and they've been the biggest theme this week. There's L&T, which is up 2% right now. Adani Ports is 1% higher. Some of the financials are looking good as we start the day. So that would be Axis Bank, Bajaj Finance, Jio Financial, Bajaj Finserv, ICICI Bank. A lot of the financial stocks, both bank and non-bank, are looking pretty smart this morning. There's also Reliance, 0.5% up. So that's helping the bulls' cause on the Nifty. On the downside, there's Max Healthcare, Eternal. There's some selling in Wipro. Then there is Shriram Finance, which is not part of the overall financial rally, but not too many losers. More gainers and 90 points. Not bad. Smart start for the Nifty, Rima.
Well, Thermax is moving smartly. That's up more than about 3%. This is after Kotak upgraded the stock to a buy from an ad. Target price set at 3,575. So these industrial, capital good companies, both L&T and Thermax, seeing a lot of interest. IDBI Bank, where Ritu was pointing out, Fairfax has emerged as the front runner. So IDBI Bank seeing some interest. That stock has gained close to about 2.5%. The rally in gold continues to keep the levels high on Muthoot Finance. So that's opened up in the green. Honasa, not quite the 4% up move, but then again, it's a small acquisition. The company is spending about 195 crore rupees. So it's a subdued opening. Keynes Tech continues with the green from yesterday. So that's got a gain of nearly about 2.5%. And I think we should pull up into Globe Aviation as well. Every day we do a check at about 9:15 to find out what the mood is on that. And Interglobe will also come up.
Okay, all right. I think we've got the market open across the board. We'll, come back to individual names in just a bit from now. Manishi Ray Chaudhary is with us. Manishi, good morning. Good to have you with us here. And we also have Anandya. So I want both on. Let's have Anandya on as well. And we'll do currency before equity. Usually we go straight to our equity guest. Anandya, good morning. Is it perplexing? I mean, the dollar index is down about 1% in the last 2 days. I mean, that itself is kind of large and unusual for dollar index to move like this. But on the other hand, you've got the rupee, which is making a fresh low even this morning. What's going on?
Yeah, very good morning, and thank you for having me. You're absolutely right. If you look at the dollar index, the USD-INR move is not making sense. But when we go deeper and look at what happened over the past 1 week or so, the U.S. bond yields have hardened. That's not just U.S. Even the Japanese, the bond yields have hardened. Because of which, what is happening? We are seeing outflows from the Indian bond market. So in the month of December, there are outflows that they have been selling in the bond. They have been, of course, selling in the equity. So overall, $2.5 billion outflow till now in December is basically weighing on the rupee. So the dollar index is not much playing out. It is the outflows which are playing out, and RBI is intervening, but in a very sporadic way.
Anandya, that's worrisome, what you just described. I mean, the equity outflow picture we've been, of course, mapping and tracking through the year. But this bond outflow, because it was, actually, whatever little money you were getting was in the bond market. What is your call? Could this exacerbate? And then what about demand coming in from importers? So what are we looking at? Absolute near term. I mean, we're talking today, tomorrow, absolute here and now.
Right. See, as long as the bond yields, because even the yields have continued to harden since last night in the U.S., even after the Fed rate cut. So that is not a good sign. And we have now the Bank of Japan. Now, if the yields continue to harden, and then I think we could see even more outflows from the bond segment. The FPI selling can happen there. Importers, they have been covering themselves, so there the risk is not there, but the risk is from the FPI outflows in the bond, and then, of course, the spillover into equity. And I think the RBI may have to come in heavily around the 91 levels, otherwise it can break through the 91.
Anandya, we thought that RBI would come in heavily around the 90 level because that was the psychological level, but that's been surpassed and every day we're sub 90 and making fresh record lows. Have you had any conversation with RBI officials, even, off the record? This crawl-like depreciation, till what level will it continue? What is the comfort level now?
The actions are clearly spelling that they are comfortable with the current levels. The kind of, you can see it as because the inflation domestically is extremely low. So we are taking the benefit of a weaker currency. If the inflation was high, then this would have not really played out well. But because we have a low inflation, RBI wants to give as much as possible support to the export sector. And so it's a kind of a trade war environment, and you are trying to use the currency as a tool.
Yeah, no, absolutely. Lots of economists have argued as well that, it acts as a bit of a shock absorber, the depreciation, especially in an environment like this. Anandya, the phone call last evening, I'm sure that on the currency side, which is a lot more sensitive to things like this, right? This kind of stuff is the lifeblood for at least people who are trading Forex. What's the reading? What's the read-through? There's not very much mention of, a trade deal or progress there, but of course, lots of other stuff mentioned.
Absolutely. If I take Commerce Minister's comments and things, so it looks like the trade dealers, of course, is going to come, but when, it's still not clear. So we have to wait for that, but it's so well analyzed and researched that we may not see a big impact from a trade deal. I think a bigger impact may happen if the Fed is forced to intervene in in their bond market, because they would also be concerned about these rising yields. They've already made an overture by saying that we are going to buy bills in the coming weeks.
In a way, Anandya, QE is back, isn't it? $40 billion a month.
Yes, if we leave aside the semantics, it is a QE.
It is QE, yeah.
I think the total quantum is 40 billion is in T-bills, and then buying 10 billion worth of some other kind of paper, which is what's going on. Thank you, Anandya, so much for joining in and weighing in on what's happening in the currency markets right now. You have a good day. We'll connect again soon. Let's head to Manishi. Manishi, now what to do? The currency is eclipsing the equity market action. But back to the central point, if you see either market, equities this morning or currency, markets are not paying too much heed to this phone call. And I think markets want to see something far more concrete, which is what they've missed all through this year. Now, what is your sense? I mean, are there enough risks to the upside, or should I say, risks to the downside view? We all are waiting for the turnaround in earnings. We all are waiting for that trade deal. But how's it looking as we enter the new year?
Right. Thank you very much for having me. It's a good day to be here, in a sense. So, the point that you made about this phone call about the trade deal not having the desired impact, I think that's partly because this has been talked about, this has been well telegraphed over the past 2 months almost. The market has been waiting for the trade deal to come through. If you look at the basic variables which influence an equity market, earnings, currency, and interest rate, only one of them, the interest rate, has been in its favor over the last, few months or so. We are still waiting for the currency to stabilize. We are still waiting for earnings estimates to move up. And even the worst part is that even for both these parameters, for earnings and currency, rest of Asia, particularly the North Asian markets, are doing way better. Asian earnings estimates are showing an uptick. There's an upward inflection led by the North Asian markets. We are seeing Indian currency being the worst performing, but much of Asian currencies haven't done that badly. Many of them are actually up. So that comparison is actually becoming stark in the minds of the FIIs, and that is reflected in what they're doing in India.
Yeah, no, absolutely.
Selling over the past few months.
Absolutely. It's becoming more and more difficult, I guess. I mean, from an institutional equity sales team perspective as well, I can just imagine, how to sell the India story where you have tax eating into your return. You have now the rupee depreciation eating into your return. So it's tough out there. On that point of North Asia doing well, Manishi, yesterday I was having a conversation with Adrian Moat. He's someone who's watched these Asian markets, including India, for many, many years, right? And I asked him that question, that if investors want to diversify away from blue chip AI trade in the US, can they come to India? Will we get some money? And his view was that even after the run in, say, South Korea, some of those South Korean chip stocks are still looking reasonable. And that was news to me,
Yes.
But what's your sense? Because we are living in hope that as the world wants to diversify away from semiconductor, chip, AI, all that, we'll get some money in the new year. But will we?
Right. I think it's absolutely right. The point that you said that Adrian made. Some of these, like SK Hynix or Samsung Electronics, they're still trading at single-digit P multiples. If you look at TSMC in Taiwan, the P multiple is a little higher. It's possibly in the late teens. But then earnings growth potential and the moat, the business moat that the company enjoys by virtue of being a monopoly, that is significantly stronger, and it's basically a very significant tailwind for continued interest on the part of the FIIs in these stocks. So I completely agree with that point, that despite the fact that these stocks have run up so sharply in 2025, I think there will be investor interest in those stocks in 2026. Also, remember that in this whole AI and AI enabler space, these stocks are way cheaper than their US counterparts. So if someone is concerned about monetization of AI and consequently the valuation of the core AI stocks, then these Asian champions, the Asian enablers, are one universe that he can look at.
Okay, I think I should take a coffee break to digest that. Something like an HK Hynix, despite the mega rally, is still in single digits, Rima. And
SK Hynix.
SK Hynix, as Manish has pointed out, and all of our IT big boys, despite all the drubbing, still in the 20s.
20, 22, so yeah.
Right.
So, Manisha, give us the big picture, right? Now, going into 2026, How is your portfolio looking like, and what are the key changes that you've made in the last 1-2 months? Because, Samir Arora was making the point that don't look at India's performance, say, on a year-to-date basis. If you just look at it from October, India has actually outperformed the emerging markets, even in dollar returns. So if you look at the near-term momentum, it's in favor of India. So tell us the changes that you've made, and then looking at 2026, what's the outlook?
Okay. Great. So we have actually added to India slightly. Just about a week ago, we rebalanced our Asia ex-Japan model portfolio. We're now marginally overweight on India. So compared to about 18% benchmark weight, we have about 19.5%. We're not going overboard, but we have a marginal overweight. We're also overweight Hong Kong, China combined. We're also overweight on Korea. We have a marginal underweight on Taiwan, but we do like the Taiwanese technology universe. And, we don't really have much of a weight on the ASEAN region, some bits and pieces in Singapore and Thailand. So great. So now coming to India, there are 3 or 4 sectors where we have significant presence. The private sector banks, I've been talking about them for ages now. And I think the outperformance is just beginning to set in over there. The consumer discretionaries, autos, and various other things aligned. And that would include some of the hospital chains or the diagnostic chains, because affluence necessarily brings about more health consciousness. I would look at some of the, the conglomerates. Like I do have Reliance Industries, which is present in a multitude of, businesses and has an earnings upgrade recently, primarily because of the oil business, the oil and petrochemicals business. The sector that stands out as being absent from our portfolio is IT services, because unlike many of Asian tech companies, Indian IT services is an AI loser. I mean, their business is possibly already getting disrupted, and until and unless these companies rediscover or reinvent themselves, their core business model is going to be significantly at risk.
By the way, both the stocks, the capital goods stocks, or let's say the industrial stocks on which we had broker upgrades this morning, both are doing really well. Thermax, where a Kotak upgrade came in, is up about 3%. And L&T, where Goldman Sachs thinks that 5,000 is possible. The target price on L&T is 5,000. That's the top index winner now, 2 to 2.2% up on L&T as well. So on industrials, Manishi, what's your view? Do you own anything here? Because again, one point of debate here is that as the government's fiscal condition perhaps starts tightening up, and we've seen some dip in the GST collections as well, maybe we may not get that big booster, year-end capex spending, government spending. So just your thoughts on the industrial side of the market now and whether you'd buy anything?
Right. No, that's a good point. In fact, I forgot about it. We do have presence in industrials. I mean, there's 2 stocks that we have in our Asian model portfolio, Larsen & Toubro and Adani Ports and SEZ. The latter could also be a beneficiary if the trade deal goes through and the trade volumes pick up and so on. So broadly on industrials, I mean, we like the space because the government's focus on creation of infrastructure, we think, is likely to continue, even though we have had a short-term pivot this year in terms of supporting consumption. Second, this whole infrastructure build-out theme is not really local, but it's also global. We think that much of that global boom in infrastructure creation would have a rub-off in terms of the stocks that you mentioned, particularly the large, broad spectrum infrastructure builders. At some stage, we would also be positive on the defense stocks, because we think that Asian defense is an important theme that will have to be played in addition to European and US defense stocks. This geopolitical tensions and defense spending is likely to be a theme that'll be with us for the foreseeable time horizon.
Manishi, great chatting with you. Thank you very much for joining in. And I hope we get one more conversation in before the year closes out. Thank you once again.
Thank you very much.
Moving on now to Thermax, that's buzzing in trade after the Kotak institutional upgrade. Vinny's here to tell us why they like Thermax a little bit more now.
Hi, good morning. So yes, an upgrade that's coming from Kotak Institutional Equities on Thermax. Upgrade to a buy from a previous ad rating. Target price is at 3,575 rupees. Now, when you look at Thermax as a stock, also in the last 6 months, it was down almost 20%. So there was a correction in the stock price and in terms of valuation versus its peers. When you look at what is coming in for the company in terms of order inflows, that has started improving. And that is what even Kotak is highlighting, that the company seems to be poised for growth and improvement in terms of margins from here on. They're saying that the portfolio will start benefiting from scale up in the existing business. Do not forget that the company has been, cutting down on those lumpy orders and only looking at good orders. So the order book has started improving, and that will lead to improvement in terms of margins for the company going forward due to the reduction in troubled orders. Also, rebound and underutilized chemical business and positive mix over there in terms of the product segment is a good positive for Thermax, and that is why the stock is buzzing in trade, and Kotak has upgraded the stock as well.
Okay, all right, got that. Thank you, Vinny. So, both of those stocks continue to be in focus. Let's move on now to our first management interaction of the day. NLC India is a company on our radar. The stock has not done too much in the last 1 year. It's been down about 6-7%. But the company recently declared commercial operation of its power plant at Ghatampur. And this is a pretty important plant for NLC India. Mr. Prasanna Kumar Mottapalli, Chairman and Managing Director of NLC India, is with us. Mr. Mottapalli, thank you so much for joining in. Good to have you. I know in the last 1 year, we've been discussing the timelines for Ghatampur quite often. So this is what we really want to understand. The plans now, as the unit has been commissioned, how does it ramp up? Then we want to look at your 2030 targets as well, whether there are any changes. And of course, renewable energy, what's happening with that side of the business and whether you're looking at coming to the market for a listing anytime soon. So let's start with the Ghatampur Unit 2 first. So just give us an idea. It's been commissioned. When does the full ramp up happen? What is the revenue contribution? In the past, I think you've given a guidance of about 8,450 crores top line contribution. But I'm guessing that's when the whole plant is up and running. If you could just walk us through the numbers now.
Good morning, madam. As you rightly said, our Ghatampur unit number 2 declared commercial operation on 9th December. And immediately on that day itself, it reached its full capacity of 660 megawatt. The unit is operating at full capacity since then, more than 660 megawatt. So as on date, both the units of Ghatampur are operating at full capacity of more than 660 megawatt. And we are planning all the activities for unit number 3 are also in fast track mode. And we are expecting that in the current financial year, we will be declaring the commercial operation of the entire station. And coming to the contribution in the unit number 1, during its operation, it contributed more than 2,600 crores. So as you rightly said, that 8,000 crores figures was for the entire station. So proportionately around 5,500 to 6,000 crores top line addition will be there with the Ghatampur.
So this year, just to clarify the numbers again, full year whole station contribution is going to be 8,450, and this year you're saying that even Unit 3 will be commissioned in all probability in FY26 itself. So what will be the revenue that will accrue because of Ghatampur this year?
Approximately around 4,000 to 4,500 crores, because the unit number 3 will be in the last quarter of the financial year. So it will be around 4,000 to 4,500 crores.
So then what is the 5,500 to 6,000 crore number that you shared with us? What was that?
Pardon, madam?
Just 2 minutes back, you also shared a number of 5,500 to 6,000 crore.
No, madam. Actually, total 3 units running at the 8,000 crores.
Okay. And this year, it will be 4,500 to 5,000.
Exactly, madam.
Got that. Sir, in H1, we've seen lower lignite production. I think in Q2 itself, your production was down 8%. What is the expectation in Q3, Q4? Is there any number you can share with us? And there were some land issues also.
Madam, the lignite production reduction in the H1 of this current financial year, that is mainly attributed to less power demand because lignite is, we cannot transport it for longer distances. So whatever is the requirement, the production is done. And there is no reduction in the lignite production because of the land issues. Land issues, the majority of the land issues have been sorted out, and none of our mines are getting affected because of the land as on date. And further land acquisition activities are also in fast progress with support from state government and central government. So there will not be any issue because of the land non-availability in the lignite production.
Okay. And what will be the total lignite production for FY26?
Our target for FY26 is 25 million metric ton. And we are hopeful that we will be reaching that figure this financial year.
Okay. So let's talk renewable energy. Can you just tell us how the whole renewable energy plan is shaping up? What are your, your targets for this year? Capacity addition next year? How much more capex are you going to put to work? And then the big question, when are you looking at a listing?
Madam, as you rightly said, NLC is a leader in renewables, and we were the first company in the country to add 1 gigawatt renewable capacity. So taking that forward, we want to increase this 1.4 gigawatt to 10 gigawatt by 2030. That was our target. And in the current financial year itself, already we added 160 megawatt, 150 megawatt in Barsingsar, Rajasthan, and 10 megawatt in Tamil Nadu. So this year we are expecting addition of around 600 megawatt. By March 31st, we will be adding around 600 megawatt. And many projects are in pipeline, like 600 megawatt Khavda renewable project is in fast progress, and 810 megawatt Pugal solar park work is also fast progress.
Sir, just to understand, you said that your original plan was 10 gigawatts by 2030, right? Now we have 4 years left. 25 is over.
We will be adding more than that, because already the projects in pipeline already they are crossing 8 gigawatt. So we are hopeful that we will be doing much more than 10 gigawatt by 2030.
So there's no slowdown then. Yeah, so got it. So there's no slowdown in terms of your plans there. So then what about the listing? When will you bring this entity to the market?
Madam, all activities for the listing are in fast progress. And as you know, the cabinet approval also we got 2 months back. And all activities are in fast progress, and we are hopeful in the H1 or latest by Q3 of the next financial year, we will be coming up with to the market.
Okay, we'll leave the conversation here. Thank you very much for joining in. There's work coming in from NLC India. I think lots of numbers he shared. 10 gigawatt of renewable capacity by FY23.
By 2030.
Sorry, by 2030. Hopeful of an IPO for the renewable business by H1 of next year. If not H1, then at least Q3 for lignite production, 25 million tons. And even for the Ghatampur thermal power plant, this year contribution at 4,500. And next year, once all 3 units begin commercial operations, then the revenue contribution should be closer to, I think, 8,000 crore rupees. So that's the work coming in from NLC India. We will slip into a break. The Nifty is up close to about 0.5%, above the 26,000 mark. Mid-caps are moving up. Now you're seeing a little bit of the optimism. The start was a bit quiet, a positive, but now some gains are being built on. Rupee continues to trade at pretty much record low levels, 90.47. Get into a break. On the other side, we'll invite Nimesh Shah of ICICI Prudential AMC. He will join in to talk about the IPO that opens today. Stay tuned.
"26 years of CNBC." 26 years of CNBC-TV18.
Okay. All right, let's talk about ICICI Pru AMC. It opens today. The company is looking to raise 10,600 crore rupees. It's an entire offer for sale where Prudential, which has a 49% holding in the company, will bring down their holding by 10%. ICICI Bank holds a 51%. They're not selling any stake. This is a pure offer for sale. But just some stats. Now, this, while in overall AUM terms, it's India's second largest AMC. In terms of actively managed, it is the largest. That's one. Secondly, and its market share stands at 13.3% in terms of actively managed. Secondly, it's got a very high equity skew versus the others. So the equity AUM mix is about 55%, 56% of the overall. Third, it is the most profitable AMC amongst the ones which are listed. So the operating profit before tax market share for the company stands at 20% as of FY25, higher than an SBI, which is at 16.8%, or an HDFC AMC, which is at 16.8% also. Fourthly, the revenue, EBITDA and profits have grown at a CAGR of 32% over FY23 to FY25. And the implied market cap is also competitively priced to say an HDFC AMC. ICICI Pru comes at 1.07 lakh, while HDFC's market cap, AMC's market cap is at 1.13, 1.14 lakh crore. Just some risks. The big one is the regulatory overhang because of the recent SEBI consultation paper, which is looking to reduce the caps on the total expense ratio. Will that hurt the overall margins, increase the operating costs? That's one. Two, competition. So many discount brokers are coming out with their own AMC. Jio BlackRock is scaling up. And third, the cyclicality of the equity business. So that's just a quick, roundup of and some key numbers about ICICI Pru AMC. And we have with us Nimesh Shah, MD and CEO of the company, joining in. Thank you very much, Nimesh, for joining in. Just want to start first with the risk. That's the regulatory, because we know we've all been witness to the strength of the AMC business, the financialization of saving, increasing, rising retail participation. But the risk and the overhang right now is that SEBI consultation paper on capping the total expense ratio. So first, for those who don't know about it, can you briefly explain what is SEBI, what is SEBI saying about TER, what they want to do, intend to do? And two, what, according to you, will be the impact? What is your expense ratio? How much will that come down, compress your margins and profitability?
Before going into that, let me say that I and Survi would have discussed this since last 15 years.
I think so.
What is the
Every
risk?
consultation paper we sit.
I think the brilliant thing that SEBI has, I think this industry has been regulated brilliantly by SEBI all these years. And the best thing part of this is that our expenses have always been controlled. Right? So if my BIPs are going down, over the years my BIPs have gone down. If what I charge to the fund, but what is going down, what I am charging to the fund goes down. As I charge lesser and lesser, as my AUM grows, I charge lesser. That is anyway there. And as I charge lesser, my product becomes better and better for the final investor. So as margins go down, as seen in this industry, look at the last 10 years. As the margins go down, the volumes go up so much that profit only goes up. So I am the one to say that this is the best thing to happen to this industry, that regulator has converted it into a very pure product, which is good for the final investor. We can have a debate whether the margins for us are good or not, what you are asking me, but there is no debate that this is a very good product for the final investor.
Of course.
But having said that, Nimesh, having said that, and your point is completely taken, and I think the whole industry probably echoes that view, that every time some of the other regulation has come in, eventually it's grown the market. So ultimately it's been good for the business. But having said that, if we talk about, the operating profit, so we talk about the yield, and yours is the best in class, no doubt about that. Looking at operating profit before taxes of, over 3,000 crores. Is this a peak? Does it necessarily go down from here because of A, regulation, and B, competition, and huge competition from passives? I mean, you have the likes of BlackRock coming in, Jio BlackRock, trying to change
many questions. Let's do one by one. So first, the elephant in the room. It's not that big a deal as it is made out to be. SEBI has come up with something which is, first thing, it is not affecting even the bigger AMCs so much, right? It is not that. And second thing, we are discussing with SEBI, right? SEBI has said it's a consultation, come and talk to us. As MFI, we are talking to SEBI The idea is to rationalize some of the charges, right? I don't think, even if there is an impact, I don't think it is that major in my mind, right? I don't think, when SEBI has been very constructive always, and this time also, the idea is to rationalize things, and I think they will be rationalized. I never get worried, as you know, over the years we have discussed, I've never got worried about all this happening, right? Some impact it will happen. We know how to manage our business. We have done it earlier also. So I don't think that is a major impact. Second thing, competition.
The competition part of it, yeah.
Competition is very good, right? Last so many years, the number of mutual funds have only increased. But look at the top 3 mutual funds. Their market share is more or less. As long as in this industry, SEBI has created a product that as long as you are doing well for the customer, your people will give you money, right? It's a very simple business. Manage money conservatively. If you manage money conservatively and people have a good experience with you, whole thing is, we have always seen, and whether you do it by native intelligence or artificial intelligence, if you manage money well and somebody has made money of you, there will be, my guys did a lot of analytics and came to that if a customer has made money out of you, he will invest further. They are identifying those. But that was natural intelligence also told me the same thing.
Now it's been AI.
Now it is AI-driven new wisdom, which was always there. Yeah. That if a customer makes money out of you, then money naturally flows into those funds only. You have been seeing those funds which were 2,000 and 3,000 crores are now 75,000 crores, right? Because they have done, if you give more than 20% return over 20 years, will the fund not become 75,000 crores in size? And you said, is it the top of this one? We could have said the same thing even 5 years back, 3 years back. I believe there is an infinite market. The young person has started coming into capital markets first. So from traditional products, even if you look at the bank deposit number, it is 230 lakh crores. Why are we getting excited that it has become 80 lakh crores today, mutual funds? Right? We are only 1/3 of the banking industry today. And our products are reasonably good for the final investor. He has had a good experience with us.
Yeah. Nimish, allow me to come in. Morning and congratulations, you coming to the market. So just a couple of questions here. And my question largely is, look, I mean, it's a fantastic business. I was saying this, I mean, the non-linearity is just, I mean, with the same number of people, you can manage, a small amount, large amount, very, very large amounts. So, I mean, the unit economics are absolutely fantastic. Very few other businesses like that. So that absolutely works.
We have to invest more as we grow in size.
Yeah,
but 15 fund managers today. I had 3 fund managers some time back. So we over-invest on the investment side.
Are you really saying that 3 to 15, I mean, the cost
over the last 10? Yeah, cost will increase. No. Investment side.
No, my point is that, in a regular manufacturing business, I mean, to increase output, you got to put up a manufacturing plant. You went from 3 to 15. I'm just saying the non-linearity is still amazing. Yeah. I mean, the unit economics in that sense. My question is very simple. It kind of points to what Surabhi said, which is, where are we at in terms of, because the opportunity set seems to be very large, long runway of growth. But say, and I picked this data out, when this is the week where we completed 26 years at CNBC-TV18. In 2011-12, mutual fund share in household savings was 0.9%. It stands at 6% right now. Where can it, that's the bigger, broader kind of tailwind here. I mean, what's your sense?
See, I'll talk about the industry level. I only look at all this macroeconomics. I don't look at the GDP to our AUM or anything. I look at one number. How much money is there in the banks today? 230 lakh crores is this. If we are in the business of capital markets, slowly the depositor over the years, a depositor of 10 years back is becoming an investor today. We had 1 crore investors when we launched mutual fund Sahi Hai. Today we have got 5.5 crore investors. Those investors will gain in wealth. So I was talking to one of the FIIs that he was following up with big time with me on investing with the company. And I asked him, well, how do you look at this industry? He said, it's very simple. If you look at the numbers, 9 to 9.5% you will grow only because of your SIP and STP book, right? So that is this one. We are sitting on 6.5 lakh crores of equity. There is a mark-to-market growth also.
I think I know which investor you're talking about. Okay, fair enough.
So 9 plus 9, I'm saying even if the country gives 9 to 10% return on a nominal growth of 9 to 10%, what is the return that will come into the markets? So you get the beta of the market, you get the alpha of the market. So that is...
we agree with you. I mean, I'm not saying that. I think it's one of the few businesses which has this earnings growth. But is there any way to think about the... Look, I mean, in India, there are 14 crore demat accounts. I mean, just trying to look at the data in another way, right? 14 crore demat accounts, unique accounts, working population of, say, 50-55 crores. I'm not talking about existing savings going into, increasing the share of household savings into mutual funds. I mean, it's X, it can go to Y. I'm saying purely, are we here in India at a peak in terms of penetration, in terms of the share of savings can increase into mutual funds? That may happen, but just in terms of penetration levels, are we there?
The number of, intuitively, the number of investors who have gone direct and who are making losses, right? Half of them may go away from the capital markets completely and the other half may come to us. I don't know what will happen, but I always tell my securities people that good, you're doing KYC for us. They are losing money doing direct stocks. They might come to us.
But
I don't know.
So the other, and I know we're grilling you on every possible, black swan event or scenario or risk factor. But the share of active, the whole active versus passive debate, and one of the reasons behind your stellar profitability is that you have the largest, active AUM in the country.
Correct.
But now as the market evolves, investors mature, and deep-pocketed players, which are passive first players, now whether it is Zerodha, whether it is Jio BlackRock, when they come in and make a big splash, is that going to, create more challenges in terms of retaining profitability at levels where it is today?
All what I said on growth cannot work if we don't perform well. There is a risk. If you ask me what is the risk in this business, I see one clear risk in this business. No amount of sales and distribution can sell a product which is not working well for the customer.
Correct.
So unless we generate alpha, unless we generate more than the benchmark, we can't sell. Right? It won't sell because then people should buy passive. No, if I am being paid fees to beat the benchmark. So unless I beat the benchmark, I cannot get money. Then otherwise ETFs will grow. So the way we have structured,
which is what we've seen in the West. I mean, that's the way, say,
in the West there are two issues. There are two issues. One is that the fund managers are not beating index to a great. Some of the fund managers are not beating index. 90% of our AUM over a 3-year basis has beaten the index right now. So one is, and second is, if you invest in ETFs, there is a taxation advantage versus mutual funds. That is not there in India. So these are the two reasons. If I don't beat benchmark, why should I get money in active funds? Absolutely. We should only go, and CNBC will itself tell its customers, please invest in passive because active is not generating alpha. So I cannot, so that is the risk in this business. If you ask me what is the risk on all these big numbers, is performance. So if the fund performance is not there, that is a risk.
Okay.
That you can't run away from that risk. That risk
Agreed.
and then passives will become bigger.
Then they'll take
Today, on the retail side, passive is not as big.
Yes.
On the retail side.
Yeah.
If you see here last year, if 100 rupees came in active, 6.25 rupees came in passive. In the retail side, not in the Insti. Insti, the pension money comes in passives.
Absolutely.
Otherwise, the retail money today is relatively
largely inactive.
Because we are performing. Mutual funds as an industry is performing. If we don't perform, passive will become bigger. I completely agree.
No, the golden rule is always money chases returns. But just some numbers. I think your revenue yield is about 52 basis points, which is higher than that of HDFC AMC, which is at 45 basis points. But the profit yield, I believe, for both of you is similar. So can you explain on the nature of expenses which drives this compression from revenue to profits vis-a-vis HDFC AMC?
Actually, we always look at one figure, number is operating profit, because there are various businesses. This is an outcome. Only when the analyst told me, I realized this is 52 bips, 37 bips, because we look at each business is different. There is a liquid fund business where mainly there are institutions investing. There is a debt fund. So debt fund, there is equity funds, there is alternates. All the 52 bips you see is a summation of all these different businesses. There, one only addresses institutions. One is a retail business. Equity is a retail business where debt is more or less institutional business. And the bips are very different. So if the equity markets grow, then suddenly my bips will look better because my mix has been improved. So we don't know what will happen on that side. But I know vis-a-vis competition or vis-a-vis other players in the industry, maybe my cost is higher, but my revenue is much higher. Right? So when you are doing alternate business, the alternate business is at a higher cost income ratio than the mutual fund business, right? Because we are investing also in that business. Not only in the mutual fund, the way we are structured as a company, there is a mutual fund business where is a very conservative business where the retired school teacher is my target customer. That's how we look at the mutual fund business.
The alternatives business has grown at over 40% CAGR, right? Could you give us a sense of what this, what will it do for your fees and profitability and as a meaningful profit center?
Yeah. So if you see West, right? Again, in the US, 10% of AUM is in alternates, but 44% of the profitability comes from alternates, right? So alternates, does it have a higher margins? They have a higher margin because you can have profit share also over there, right? If we do better, we may not charge any fee on a PMS or a AIF. We can say zero fees. And if we make money, if the customer makes money, after that we can make money. So there are a lot of permutations possible.
And here
mutual funds is very, there is, BIPs are decided by the regulator fixes everything. On the alternate side, there is a flexibility how we negotiate.
What can it be for you? I mean, you're also in talks with ICICI Ventures to acquire mandates.
That is the third business. Correct. So one is the alternate business right now for me is we have got a substantial PMS business, right? We are one of the largest in the industry as far as individuals are concerned. Then we have got a credit business. We started that business 3 years back. The first fund was 1,600 crores. The second fund was 3,200 crores. And we are raising the third fund. Then I think we are very, very focused on another business, which is the commercial real estate, which is done very well in West. Prudential had done it very well in UK, where they own huge amount of office spaces. What happened in 2020, that when the builders wanted to sell off their A-grade buildings, a lot of American outfits or Canadian outfits went and purchased a lot of buildings in this country. Why can't we do that? So commercial real estate is a good yield business, right? It's a good yield business and meets my risk criteria, right? That there is no construction risk. You take ready-made buildings. So I think it's a very good business, commercial real estate. Maybe later we can do a program only on that. That's that good a business. So alternates is a very important business. Third business is if we get the approvals from SEBI, we have yet not got approval. There is a very good business somewhere in ICICI. There were where we have proposed that we'll take over that. That is private equity.
The ventures, yeah.
ICICI Venture is into private equity business. They've got a ready-made team over there. I get those funds, I get those teams. But that is yet to get SEBI approval. That's why I'm not talking about.
How large is that? The mark-to-market?
Today, there are a lot of other benefits. And AUM-wise, it's not, it would be some $500 million or something like that. But I think we wanted to, if I want to start a private equity business, I will have to first create teams, etc., which will take 5 years. This straight gets me into the market.
What's the timeline for a potential regulatory approval for this?
I don't know. We have applied to SEBI. As soon as SEBI approves, it can happen.
This is a complete offer for sale. Will Prudential have seller's regret by the end of it?
See, we talk about long-term investment. Yeah. Prudential has invested in this company for 28 years. Yeah. And they are doing a part exit for themselves. Yeah, sure. For 28 years, I guess, is defining all our long-term definitions are cleared in 28 years.
Ramesh, we'll have many more conversations, but it's fantastic to have you in the studios. Good luck with the IPO.
Thank you.
And thank you very much for joining us.
Thank you.
Thank you.
Okay, what we're going to do is take a quick commercial break here. We'll come back, Manisha, with commodities and focus on the other side. Stay tuned. More comes up.
"26 years of CNBC-TV18. "26 years of CNBC-TV18.
Welcome back. It's time to talk commodities. We have Manisha Gupta joining in with the latest. Manisha, what do you have your eye on?
Well, metals, and because even as we are heading close to 2025 end, it still is the precious metals, base metals continue to trade very, very strong there. When it is majorly about the treasury yields which have continued to decline. The dollar index is now trading at an 8-week close, is down by 9% for this year. You also have the US Fed now looking to expand balance sheet by $500 billion. And some market participants are reading this as a quantitative easing. Very bullish again for gold and silver there. I'll start with gold and silver both because they're headed for the best annual gain since 1979. So gold prices gained 1.5% in the overnight market, and we are trading above 42.70 at this point in time. 43.81 is an all-time high, still slightly far away from that. But when it comes to silver, it has been a 4% of a gain overnight, and this is trading at an all-time highs of $64.32 an ounce. For the gold prices, it also has to do with the Chinese official gold reserves, which have continued to increase for a 13th straight month for the month of November. And they added about 30,000 ounces, and it holds at a record around 2,305 tons as of now. So Chinese silver buying has just about continued every single month in last 13 months there. Take a look at silver prices then, and we are up by 120% in 2025 till time. Silver is trading at a record highs, not just in US, not just in India, but in various other countries like China, Germany and Australia, and the list perhaps could just go on. The third metal on your screen should be copper prices, because they're also trading at a record highs of $11,800 a ton. For copper, we've seen a gain of around 36% in this year till time. And for copper as well, it's trading at an all-time highs in US, in China and the Indian markets also. Well, there are strong growth projections coming in for copper from US. The China stimulus measures perhaps could add some more support to the prices. Also, when you look at the demand and supply concerns, the kind of deficit that copper is looking at is going to be supportive going forward as well. And then there's a very interesting International Energy Agency report which says that in 2024, the demand for refined copper was 27 million tons, which will grow to 33 million tons by the time it's 2035 and 37 million tons in 2050. And the production details perhaps could not be as fast. So that means that copper perhaps could continue to be in deficit for the years to come, clearly supporting those prices. And then you have the other metals like platinum, palladium, which are also trading on a higher side. We've seen palladium prices trade at October highs. Here as well, we've seen prices gain up because of the China auto sales, which is up 3.5% at an 11-month highs for the month of November. Zinc is trading at around 2-month highs, aluminum at a 1-month high. So everything that you say as metals, whether it's precious or base metals, has continued to gain even today in the Asian markets therein.
Thank you, Manisha, for that. On that note, we'll slip into a break. On the other side is our special Indianomics segment. Lata speaks to former SEBI whole-time member Anand Narayan on the cap on mutual funds investing overseas and other issues.
"26 years of CNBC